Hello and welcome, everyone. My name is Jason Allen Jankowski, Forex analyst and trader. Today, broadcast I'm presenting to you is training for the Pro Traders Toolbox. For those of you that are brand new, maybe you've never heard me speak before, the Pro Traders Toolbox is my proprietary method of executing in the foreign exchange markets, and actually it will work for equities or futures if you're interested in those markets. Today, we've invited those that have recently purchased the Toolbox in order to do some direct training, answer questions. You don't have to own the Toolbox to attend, obviously. This will help you get more acclimated to it if you're seriously considering a purchase of it. And if there's questions about the Toolbox specific that you'd like to ask, be more than happy to answer those at the Q&A session at the end of the broadcast. Also, sometime in March, I'll be doing an open introduction to the Toolbox where we talk about the theory behind it, how it thinks, how the algorithms come to the conclusions they do, and that can be very enlightening. So you might want to stay on my mailing list if you're not currently on my mailing list. Details on that on the website. So let's go ahead and get started. That's really all the house cleaning I wanted to get to. For those of you that may be new to the marketplace, trading in off-exchange or cash foreign currency transactions, Forex, that's not suitable for all investors at all points in time. It does involve a degree of risk. You need to make sure that you're financially and emotionally qualified to assume risk. People can and do lose money. In rare cases, they may lose more than they invest. Of course, what we're hoping for today is that product that I can offer you here might be able to help you avoid those situations. But in any case, that risk is real, and you need to be okay with it. And obviously, we don't want you trading if it's not right for you. Everything that we talk about in here today is considered opinion, and it's subject to change at any notice, without notice at any time. Going to tell you just a quick second about me. Now, we've got new listeners in here. For you guys that are regular listeners, you've probably heard this before. Feel free to top up your coffee mug if you don't want to listen again. But real quick, I want to remind everybody that may be brand new to what I do that I'm the real deal. And what I mean by that is I started in this business in 1986 as a customer, just like you. And at that time, as a young man, I had been successful at everything I had ever tried in my life. For those of you that would like to read the story about how I became a net winning trader, you can get a copy of The Art of the Trade. It's one of the 3 books I have published by Wiley & Sons. In there, I tell the story about how I went from being a net loser to net winner and what I learned in that process. One of the things that I discovered is that the markets are not what you think they are, and because of that, making net gains consistently is harder for most people. What the Toolbox attempts to do is take advantage of something that is unique. It attempts to take advantage of how loser psychology is working in the market. See, when I got into this business in '86, I had been successful at everything I'd ever done at that point as a young man, and I thought this business would be no different. And so I went to work with the accepted conventional wisdom of how success was made, and I got my head kicked in for years. I lost money. I lost my clients' money, my money, for years. And it was a real emotional struggle for me. When the light went on, and I learned what this business was really all about, I never looked back. I had a massive, cathartic epiphany of understanding. I'm a different guy today. In fact, people that meet me now that knew me back when I was first in this business, they will always ask, they'll always ask, what happened to you? You're a different guy. I'm not saying that you would have to go through the same sort of experience or have the same sort of understanding or change that I went through. But what I am saying is that you're never going to make a dime in this business until you understand the nature of how these markets think and the nature of how you think. This business is about thinking. It's not about analysis. In fact, in my Psychology of Trading course, which I teach every quarter, we don't even talk about the markets from a standpoint of analysis until almost the very end of a 6-week deep immersion process. The markets are the least important part of this. 95 to 99% of trading, in my opinion, is psychology, of what goes on inside your head and what goes on inside the head of the guy you're competing against. I had to learn that the hard way. Because of that, I find that my value to you as a potential trader or someone who might want to have a closer relationship with what I do, either one-on-one coaching, mentoring, purchase of trading tools that I offer, or take my psych course, or even work through my mirror trading program. If you're interested in that, we can talk about that too. The value that I offer you is the fact that I went through this business the hard way. There is no mistake that you're going to make that I haven't made 100 different ways from Sunday. There is no market environment. There's no market conditions. There is no argument you could make that I don't know inside and out, upside down and backwards. That is what makes what I do valuable, and it's unique. 90% of the people that you're buying your information from over the internet now don't even trade. I mean, they're just total frauds in my opinion. And they teach the same thing that everybody else teaches. You know, if you take a course at something like Invest Tools or Optionetics or Online Trading Academy, you're not going to learn anything there that is unique or special to anything else. It's all the same data. And I talk about the problem of shared data in my book, Time Compression Trading. And I think you'll find that if you want to make money in this business and do it consistently all the time, you have to have an edge that exploits the loser mentality. So the Toolbox is designed to provide part of that edge. And that's what I want to talk to you about today. For those of you that own the Toolbox, I want to go ahead and offer you some insight into working with it. So let's get to work. Here's some basics about the Toolbox. It'll run on the top 4 industry-recognized what we call trading platforms or analysis platforms. It'll run on Trade Navigator by Genesis Financial Technologies, Multicharts, TradeStation, and MT4, MetaTrader 4. Most of the people who have been investing in the software lately have been on MT4. So today I'm going to spend a little bit of extra time introducing you to using the Toolbox on the MT4 platform. There's some things about each of these platforms that's unique. On Trade Navigator, you need to install the templates by importing the software into the platform. I'll create them for you. I'm the only person you can get the Toolbox from for Trade Navigator is me personally, so you have to get an email to me or a phone call and we'll work on getting you set up. But there's a special way you have to import it. Genesis support will help you put it into Trade Navigator. They won't tell you how to use it, but they'll make sure it's running properly. There's a couple of things about that that you need to know. It'll run on TradeStation, Multicharts, and MT4. You get the software from my programmer, Progster, at codefortraders.com. So you might want to jot that down, codefortraders.com. Any questions about getting set up? Progster can help you with that. Again, he will make sure that it's installed and running properly, but he won't train you on how to use it. If you buy the platform on any of these software packages, I'll train you for an hour. We'll do a private webinar one-on-one, and I'll show you the basics that you need to know specifically for the questions that you have. Everybody's a little bit different, but I want to make sure that everybody gets the full value of the product, because I really think if you know how to use it and understand how it's thinking, it'll really fine-tune your edge, really shorten your learning curve. With regards to Trade Navigator, you want to make sure that you only use the template that's designed for the currency pair selected. When you download it, it's got 5 templates: pound, euro, yen, CAD, Swissy. Make sure that when you load dollar Swiss and it's on your chart, you're using the dollar Swiss template. Otherwise, you might get some false signals and your stops will be off. There's a part of the software is a recommended stop, place where you would want to put your exit order in the event you're using the signal. Also, you want to get the maximum data set from Genesis FT. Normally when you buy Trade Navigator and it runs on Trade Navigator Gold or higher, if you use it, you need the maximum data set. They usually include that, but you want to make sure and ask that. And also, when you have the templates up and running, you got to go to the intraday charts and set your max days for intraday data to 200. The default setting is only 10. You need to set it to 200. Otherwise, you'll see it on the screen. It won't give you signals past a certain point. You don't want that. So you want to get 200 days for max data on intraday and change the default setting. TradeStation, using the radar screen, is a benefit of running the Toolbox. So if you're familiar with TradeStation and how the radar screen works, that's a real nice feature to have with the Toolbox running, because it will give you the ability to monitor multiple signals on multiple time frames, which is part of what we're going to talk about today. However, you don't need to do it. You don't have to run the radar screen to run the Toolbox. You can use it any way you want. On multi-charts and MT4, page creation and backtesting features are very useful on multi-charts. And then creating profiles in MT4 will save time and speed so you can load the toolbox on multiple time frames. And I'll show you right now, when we get to MT4, I'll show you the profiles that I have set up. And you can see I can toggle back and forth between those profiles very quickly to get multiple time frame data. And let's move this to here. Okay, now regarding the signals, this is where you might want to take some notes here, guys. On the signals, here's what you're looking for. You're looking for what I call conflict and congruence between time frames. And I want to ask this real quick. Has anybody out there read my book, Time Compression Trading? Kim's got a couple of notes here. Kim, we'll get to these in a minute. Anybody out there read Time Compression? If you haven't, that's okay. We don't have a really big turnout today, but if you have, it'd be great to know. One of the things I talk about in there, a couple of yeses coming in. Great, okay. A couple of no, not yets. That's good. Hope you get a chance to get it. When we talk about multiple time frames, conflict and congruence, one of the things that I talk about in the in time compression is the issue of how the loser is approaching his behavior. The behavior, of course, is clicking the mouse for a buy or a sell, right? Well, the loser is looking at the marketplace differently. He's making his choices using certain kinds of information. The winner is looking at things differently than the loser is. Typically, and if this is true for you, I would encourage you to start thinking things a little more clearly. The typical loser, the person who is losing consistently, somebody who, has his wins here and there and maybe puts in a good couple of days or a week or two, but net, from the day they started till today, they're down. That guy typically is operating on a small time frame. They're using 5-minute charts, 2-minute charts, 7-minute charts, 15-minute charts. The loser is on a small time frame. The winner in the market is on a higher time frame, typically 1 hour, 2 hour, 4 hour, daily, weekly, monthly. The toolbox will provide signals on all of these time frames. What you're looking for is conflict between the low time frame and the high time frame. In other words, a low time frame is showing time to buy, good signals on the buy side. You go up to a high time frame and it's showing topping, places to go short, signals on the sell side. You want to then use the sell side as the accurate or more accurate signal for that market. Now, that doesn't mean you can't use the toolbox on a low time frame, and it doesn't mean that you can't get good signals on a low time frame using the toolbox. What I'm saying is, if you want to understand how it's thinking and get the best out of it, get positioned for, in the case of Euro, I don't want to brag, but it's my only winning trade for the week, is I shorted Euro into the highs for the week. On Euro futures, there was a reversal pattern at the high for the week on a high time frame. In other words, maybe that's the high for the week. Market's now, 150 lower from that area? I got a lot of that. Now, I'm not saying you can't trade on a 5-minute time frame and make a consistent 15, 20 points a week, but, how hard do you want to work? Do you really want to try to consistently take 20 bucks out of the market, or do you want to do 2 or 3 trades consistently every couple of days or every week and pull 300 a week out? So it's your call. It's however you want to use it. It's a tool. Congruence is when time frames agree that that signal is becoming more viable. In other words, when we have the chart that says, okay, Euro's at a high, time to reverse, and then that's, say, a 4-hour chart, and then the 3-hour, 2-hour chart says the same thing an hour or two later, then the daily on the close comes on and says it's a sell as well. That would be congruence. The best trades are when the 5-minute, 15-minute, 30-minute are all saying buy, for example, and the 1 hour, 4 hour, daily, weekly are all saying sell. that's most likely the sell is going to work better. That would be conflict and congruence. High congruence on a high time frame coupled with conflict on a lower time frame. Larger time frames control the markets. So you want to lead with the larger time frames whenever possible. Now I'm looking at some comments coming in here. Let me just check real quick here before we get to charts. Okay, a couple of yeses coming in on some other stuff there on time compression. Thank you. Okay, Kim, we're going to get to your comments in just a minute. I'm going to show you a few examples using the toolbox running on MT4. Now, if you notice down here, I've got Trade Navigator up, and I've got MT4 up. So I'm going to show you MT4, and I'll also show you Trade Navigator so you can get an idea about how the signals are generated, how they look, etc. So let's go right to here. Guys, help me out. Let me know when you've got MT4 visible. Okay, so we've got MT4 visible. Let me go ahead and close out these yeses here and make sure my mic is working right. Okay. All right, now on MT4, let me just go ahead and move my windows around a little bit. MT4 is slightly different than other packages, and you can set it up a lot of different ways. When you get the software from Proxter, he's going to preload it with some stuff. Let me go ahead and show it to you. So you go to File, you drop down File to Profiles, and here they are. Pro Traders Toolbox, PTT. All of these are profiles. The profiles that I created are these listed down here. So you can take a profile that's preloaded, customize it any way you want, save it, and that can be a setting that you use. So what I have right now is what I call Market Watch. I like to watch the 1 hour time frame. I like my charts to have a white background, and that's what I like. So this is how I watch it. So we've got Euro, Pound, CAD, Yen, Swissy, right? On the MT4 platform, the toolbox places signals, red letters for sell signals, green letters for buy signals, blue letters for negations. The toolbox has something that is not as common as other platforms or analysis packages, is that if a signal comes on, that's great. But if something's changing in the market after the signal comes on, wouldn't you want to know about that? Well, the negation feature is something that will then post. If something is changing and maybe that trade is no good anymore, or maybe you need to be cautious, it'll print a blue letter relative to the most recent signal. Here's a negation right here. Pound hourly. This is a capital T. A capital T means strong trend buy. When that signal came on, the next 2 bars later was a strong trend negation, meaning don't let it go to the stop. Take it off if you want to. It doesn't mean the trade's no good. It just means it's probably got something suspect to it. On Euro, we have regular trend sells. That's the little t. Some of you guys might want to make sure that when you're first using the system that you blow your screen up and you can look at big picture for your particular study. Here you can see trend buys negated. Saved you some money there. Trend sells, even though one trend sell, the most recent strong trend sell was negated, the market still had potential. So the blue T, or I should say the negation feature of a signal, does not mean the signal's no good. It just means it's a caution. Use your best judgment. The difference between the toolbox and other platforms that are out there for helping you get position is that the Toolbox is designed not to eliminate your thinking, but to complement your thinking. It's designed to say, okay, I'm working with you. So here's something you need to know about. Here's an opportunity. Be careful over here. So you use your best judgment. Also, you'll notice that the Toolbox puts signals on both sides of the market. So here's buy signals on the way down, sell signals on the way up, and they're sometimes pretty close to each other. This is an hourly time frame. This is saying maybe you might want to be a seller over here and you might want to be a buyer over here, right? Then it may be a day or two apart. So if you're working on a low time frame, maybe on a low time frame, that might be helpful for you. So let's go ahead and look at a 5-minute chart. And here's a 5-minute Euro chart. Here's an H reversal that was negated, followed by another H reversal that would have given you a nice intraday profit over an hour or so. Here's a sell signal up here you could have taken at the start of the day, covered it using the buy signal. In other words, short, and then use the buy signal to cover it, and then maybe go long on the next buy signal. It'll give you signals on both sides. This is an extremely important one right here, this E. The E is called an exhaustion reversal. It's the rarest kind of signal that the Toolbox gives. It's rare because when it happens, it's 90% accurate. This is really interesting because we had an E reversal on this bar right here, followed by an E negation, but the market itself is higher. See, again, the negation doesn't mean the signal's no good. It just means have a little common sense here, use some caution, okay? Now, one thing I want to show you on this chart, I don't think I can get to it on this one. I'm going to go back to the hourly, show you it on another chart. Minimize this for a minute. So the important thing I wanted to show you on the Euro chart was the issue of how you see the signals on the chart. You want to look for your most sides of the market. In sense, you want to watch for negations to protect yourself if you feel you need to. Now, if we look at other charts, let me go ahead and go to dollar yen. Actually, you know what? I'm going to skip dollar yen, and I'm going to go to pounds. Let me go ahead and go to pounds. I want to show you something here on pounds earlier in the week. This is hourly pounds. There's one here. This is called a cluster. This is where we have, here's a trend sell, strong trend sell, and another trend sell. These are 3 signals within 4 or 5 bars. That's called a cluster. A cluster of signals tends to be more accurate. In other words, if you see a cluster of sell signals on the trend sell, like this, you're good. You might have a really strong opportunity here. In this case, the Toolbox identified a nice move lower. You'll get clusters on both sides. You'll get them on, the long side and the short side. Here's a cluster, although it's only 2 signals. One was also negated, saving you some time and money on the buy side there. So clusters can help you. Oops, we don't want that. We want this. Clusters can help you see the potential as it's developing so that you don't lose confidence. In other words, a lot of times signals, here's a cluster right here. This is a regular trend sell cluster right here. A lot of times you'll get a signal. Most other systems will give you a signal, and that's it. And you put it on, you're sweating it now. Well, the market hasn't gone anywhere. It's not into your stop. It's not negated. It's not moving against you. And then you get another signal come on in the same direction. Okay, that's good. You get something that clusters. I'll show you here in Swissy. Here's an hourly chart that basically screamed get long. Cluster on the buy side, cluster on the buy side, cluster, 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 and look where we're at up here, right? This is great confidence builder. Now, you don't need me to help you with this. This is the bottom of a range anyway. But right at the bottom of the range, the Toolbox is saying, you got an opportunity here to go long, right? Here's a great confirmation tool. Is a cluster that's really big like this. The market starts advancing, and you get a sell signal followed by a negation. That's a great clue that that long is probably more accurate, right? What some people, of course, would want to do is they take the long side, they wait for the next signal to come on, cover the long, and go short. You wouldn't necessarily want to use the toolbox like that. You want to add more credence. You want to add more confidence to a cluster. When they cluster, that usually means there's more going on down there. There's something that you need to kind of be careful to monitor. If you get an opposite signal that's immediately negated, that's a nice confirmation if you can get it. You know, it doesn't always show up there. But these, of course, are trend signals. And when we look at reversals, you're going to see those more on a higher time frame. So here's what I'm going to do. I'm going to go ahead and, you know, again, like I said, you can take your MT4, make it any profile you want. I'm going to move over to one of my profiles. And this one is, where are we at here? Euro USD, 6 time frames. And this particular profile is set up a little differently. And we're going to wait for this to load. Now, it might take a second to load. Okay. This one is loading with the black background. And you can see you can put other indicators on here. Like this one's got 2 time frames, 2 moving averages on it. The other one only had the 200, right? Now, here's what's happening here. This is a 5-minute chart, 15-minute chart, 30-minute chart, hourly chart, 4-hour chart, daily. Now, the way I would like to use the toolbox, if somebody put a gun to my head and said, the only thing you can ever do again is use MT4. Great. I would use what I had before, which is the 5-market hourly watch. I call that my initiation, my initiation watch. I like to use the 1-hour time frame to find my first signal. So when I get my first signal, let's say it's in euro, I would then move to the euro multiple time frame chart where I have every time frame is there with a toolbox running on it. And now I can just briefly run through and look for conflict and congruence quickly. So the first thing I would do, here's my hourly, is I'd go up my toolbox, and here's my 4-hour. And let's say I was looking for a top, right? I was looking for a top in euro. Well, here's the toolbox giving you an XH reversal, clustered reversal, and that's the weekly high. Notice the buy signals down here. The regular trend buys right here that were then negated. It's hard to see on a black background, but right there is the blue T. That's one reason why I like to use the white background. But if you like the black one, it's just all you got to do is pay attention. So here's the reversal pattern developing on the 4-hour chart. Nice move lower, so we got a lead. As the trade develops, we have another X reversal coming on here. That was early this morning. Maybe you'd want to add there. Maybe that's a place where you say, you know what, I'm going to put some more on. You're getting a negated trend signal on the way down. Great conflict and congruence factor. Good confirmation, right? Oops, did it again. Want that one there. Okay. Now let's go over to the daily chart. On the daily chart, we had an X reversal earlier in the month, actually late in late January. So on the daily chart, this isn't that good a congruence, but it's not a bad signal. I mean, it's trying to top here. Here's one here. We got a cluster of X on the daily. Now, if you're bull, here's your clustered buy signals here back in October. Maybe would have got you long for 1,000-point move if you were willing to hold it. See? So the high time frames, the signals are going to be more accurate, less available. I mean, if you were looking to top this market and sell it and you use a daily time frame to do it, you'd only gotten 3 signals in the past 90 days to sell. Is that enough trade for you? It may be, it may not be. But in any case, if I was looking to be a seller the last couple of days, yesterday or today, I got some signals on the hourly. I got some signals on the 4-hour. Now I'd look at maybe the 30-minute, And what do I see? There's the market's coming down. I'm getting buy signals. I had buy signals earlier on the 30-minute. Getting some buy signals, and we went into back inside the opening range for the week. Okay, that's good conflict. Not the best, but it's getting there. Let's take a look at the 15-minute chart. On the 15-minute chart, we actually had interesting congruence. Into the highs for the week, the 15-minute chart was saying sell. And right about where the 4-hour chart said add to your position, we got good sell signals clustering too on a 15-minute chart. So you could almost make the argument that the 15-minute chart, the hourly, and the 4-hour were in congruence, whereas maybe the 30-minute, maybe the 2-hour chart wouldn't be. You see what I'm saying? The one that I think is important to note is the 5-minute chart. Like I said, you're going to get all kinds of signals on the 5-minute chart. Here's trend buy signals that didn't work, were negated. Then we had X reversals that only gave you 15 points. Then you got a trend sell that would have made you rich for the day, right? And you're getting these E reversals down here, and you're getting a little bit of a lift here. But I mean, if you're trying to use the signals on both sides of the market all day long using a 5 or a 15-minute chart or something, you're probably going to whipsaw yourself. Not a good idea in my opinion. I think you want to come to the table with a bias. If you're going to be a short time frame trader and you're going to use the toolbox for like on a small time frame because that's just the nature of how you want to do things, the toolbox will find you some opportunity, but it's better to come to the table with a bias. In other words, if the market is rallying to the highs for the week, you turn this on that day and you want to use the 5-minute to try to find some opportunity today, I'd work the sell side. You know, you're all the way up at the high for the week. You're a 5-minute trader. You're just wanting to make 30 or 40 points today anyway. The probability of a pullback from the weekly high that would give you a nice 40 or 50 points is really better than chance. It's probably closer to 60% or above. So you would use the toolbox to maybe help you identify places on the sell side that you might want to participate. I wouldn't necessarily go with the buy side signals unless you wanted to then say, okay, for the day, I'm a bear into the highs, just for today. So I'll use the toolbox to find my entry points on the way down, and I'll use the buy signals to give me places where maybe I want to cover that short, or at least roll my stop down, right? In other words, there's really no right or wrong way to use the toolbox. There's only congruent and incongruent thinking when it comes to what it's designed to tell you. What it's designed to tell you is that, you think of it this way. Think of if you had a trading coach looking over your shoulder all day long, and then he taps you on your shoulder and says, hey, if you want to be a buyer, if you're looking to go long, this is a pretty good spot right here. That's what it does. It's not telling you what you should do. I'm not saying you should follow the signals implicitly. What I'm saying is you want to use the signals as a guideline and a complement to the thinking process that you're bringing to the table as it improves. It's a tool. It's not a holy grail. It's a tool. If you're a carpenter and you're going to be doing a certain kind of carpentry, then you know what tools to use. If the next day you're going to be doing drywall, you're probably not going to be using your rotary arm saw, right? So when you're looking at the toolbox as a potential tool to help you improve your edge, you want to look at it in the context that it was developed for. What it wants to do is try to show you where the loser might be participating and then show you how to take the other side of that. It'll do that on any time frame. It'll do that across multiple time frames. So if you want to use it on every time frame and compare it, what you're looking for is congruence between higher time frames and then be in conflict with lower time frames. You want to look for signals that cluster. Occasionally, they'll stack. A stack signal isn't as common. They're there. I'm going to see if I can find one right now because there was one in yen. Actually, I'm going to show you that on Trade Navigator. So if we come over here to our profiles, and we can go back to my entry watch list. And again, you can, when you get the toolbox from Proxter, it comes preloaded with profiles. You can pick the profile you want, and then you can create how you want it to look, make your charts exactly the way you feel most comfortable using them. and then save it, and that's like I save this one as my entry watch, right? So over on yen, I don't think you can see it as well here, so I'm going to show you that maybe in Trade Navigator is the stacked signal. Yeah, okay, here it is right here. This takes a little bit of getting used to seeing here. This is a big T with a little t overlaid, so it's kind of a backwards J with a roof on top. I don't know if you can see that. It's kind of hard to see. You got to kind of look closely. That's a stacked signal. What a stacked signal is, a trend cell and a strong trend cell are on the same bar. That usually is a pretty good entry. Now again, it depends on your time frame, your tolerance for risk. Here's this big, strong trend stacked with a regular trend. It was negated a few bars later, but the market itself eventually ended up moving lower. So do you want to go ahead and take the trade off because you got it negated? Do you want to roll your stops down to reduce risk? Again, these are all tools that you can use for your personal reference. I'm going to show you something here real quick. Let me go ahead and minimize this. And I'm going to show one thing to you on Trade Navigator. Here's Trade Navigator. For those of you that don't know, I do a weekly wrap-up every Friday afternoon at 4:15 Eastern Time. I put out there all the trading I did and how I used the toolbox that week for win, lose, or draw. This week, honestly, it's a whole lesson in stop placement this week. Great signals, didn't able to get positioned well with them. My stops were tagged out all the time. But in any case, that's another issue. Here, this is dollar yen on a 60-minute chart. There's your stacked signal. It's a little clearer to see here, I think. But I want to remind you that stacked signals are usually very indicative of usually a very good potential. Of course, sometimes they work, sometimes they don't. I'm going to show you the E-mini. And let's go ahead and take some of this stuff off here real quick. And this is on a 30-minute time frame. The reason I'm showing you the E-mini is because for those of you that may not be using MT4 but would like to use it, would like a tool to help on futures, if you're interested in that, you can apply the templates. This is the dollar yen template to the E-minis. And I'll go ahead and put up a 60-minute chart for you here. I probably should turn off, expand this out just a little bit. Probably should turn off the volume because I don't have it scaled properly. But I wanted to show you how the toolbox can be used on futures if you're interested in using it that way. If you use it on futures, you need to experiment with which template might work best for you. But one thing that's very important is that if you use it on futures, that you test it first. In other words, find out if you like using the dollar yen template or the euro template. The reason I can show you this here is because Trade Navigator supports futures. MT4 does not currently support futures. MT4 is the cash Forex platform, and it's a great product, and the toolbox runs beautifully on it. But if you also would like to take and augment your approach a little bit or use it on a different market, you can do that. As you can see, some of these signals, they can be very helpful and beneficial. Here, trend buy signals would have gotten you long at some great places in the market. Your reversal patterns would have helped you protect open trade longs or get short at the highs, at least limiting your downside a little bit. And of course, they'll work on multiple time frames as well. Here's a 4-hour chart, if you're interested in doing that as well. And of course, Trade Navigator, if you want to use this platform has the ability to work with all kinds of customized stuff on it if you want to try that. So what I wanted to do today, though, was introduce you to how it's structured on MT4 for you Forex traders, since we've had a lot of interest in MT4 platforms lately. But I also wanted to remind you guys that are brand new, have never seen this before, might want to learn more about it. If you're strictly a futures trader, there are platforms. TradeStation, Multicharts, and Trade Navigator will support the toolbox, and you can use it on futures or even equities if you want. Okay, that is the basics of understanding the signals and how to use them. Now, we may have questions, so we can go ahead and get to that. Before we do, I just want to go ahead and give you a wrap-up on the basics. The most accurate trend signals are clusters and stacked. Cluster signals 3 signals and 5 or 6 bars, 4 signals and 8 bars. Those are usually very good and help you maintain the position or your confidence in the position. A lot of times, like I said, some signal generators out there, they put the trade on or put the signal on for you, and that's it. The Toolbox will tell you if more signals are coming on in the same direction, which kind of improves maybe the potential in that trade or improves your confidence to hold it if it hasn't worked yet. That can really save you some time and money, as you guys know, if you're in the learning phase. There's plenty of times when you put a trade on, you're just tired of holding it, you take it off, 2 bars later, it would have made you a fortune, So part of the Toolbox is designed to help you with that process too. The most beneficial reversals are the exponentials, they're called. That's the X reversal. Blue diamonds, or E reversals, they're blue diamonds on Trade Navigator, they're on E reversals on everything else. They're rare, but they're very reliable, some huge number. The higher the time frame that the E reversal comes on, the more reliable it is. H reversals, those are what's called a hook reversal. It's a very simple technical analysis system. H reversals, they're often tested. So a lot of times, if you get an H reversal, you might have a different rule for executing on an H reversal than you do on the other reversals. Like maybe X reversals, because they're more reliable, and when they come on, they usually go, then you might want to enter on the close of the bar. Whereas on an H reversal, you might want to enter on a retest of the opening range of the signal bar. Reversals can be signals to close trend trades. Late trend signals are often negated. Remember I showed you the negated thing. So a lot of times if you're buying a reversal and the market starts to go, you're going to get sell trend signals that are then negated. Great clue to stay long, right? And that's the basics on training to use the Toolbox. So I know we got questions. Floor is open for Q&A. We can take all the time you want on some of these questions if you want, guys. I know a lot of you guys are brand new to the Toolbox, so you might have some deeper questions. I'll go back and I can toggle back and forth to the charts if you want. Here's my contact information. I'll just leave this up while we're talking. I'm the only guy in this business still answers his own phone, so feel free. You can reach me on Skype if you're international or want to do it for free. You can follow me on Twitter. I post my videos. This video will be on YouTube. It'll also be on my website. Here's my web address. If you're interested in getting a copy of the Toolbox, if you don't own it now but you would like to explore that, on MT4, Trade, Station, or Multi-Charts, you need to talk to Procster, and that's at codefortraders.com. And I had that up before. How come I don't have it here? Ooh, I should have put it right here. I'm going to put it right here then. Hold on a second. Codefortraders.com. That is Procster, Steve's website. Follow me on Facebook, LinkedIn if you want. Probably want to stay away from Facebook. I post a lot of stuff there that some people don't like. So, training on the Toolbox is done every month. Next month, I'll do another free training session. You can bring more questions if you have them. And I'll be very similar to this one, but we might be using another platform like maybe multi-charts or something if we can. Also, you're welcome to email me with questions anytime. There's a user manual for the Toolbox that is on the website. I have a page on the website. It's the Pro Traders Toolbox page. You can download the manual so you can read it, get an idea more there. There's also some introduction videos if you haven't seen those. And other details about what I do. Now we got questions here, so let's go ahead and have a look. What do we got here? Kim says, did you write the algorithms or get help programming them? No, I wrote the algorithms and attempted to fine-tune them as best I could. And then programmer, 2 of them actually, one at Genesis and Steve at Code for Traders, helped me fine-tune them. And, of course, they did the work to put them into the electronic format so they'll run on the platform. I'm not a computer programmer. I would never be able to do that. What we did is fine-tune them and adjust them a little bit and make sure that they're accurate as best we could. So there was some help from the programmers, but the actual concept of what creates the signal is something I had come up with, of course. Kim says, just finished Art of the Trade, hard read. Just so true. Well written. Thank you so much. You're welcome. Let's see. Mike is perfect. One person said good. Joshua says nice H reversal right at the top. I don't know which time frame or market that was, but that does happen, of course. Gary says, what's your view on price action only trading? No indicators or Pro Trader's Toolbox, probably just using trend lines and previous support and resistance. Okay, let me go ahead and answer this by asking you a question. What is a price chart really? What is it really? And some people might be a little confused by that question, and I'll go ahead and offer you my answer to it. I'm not asking you, I'm just asking it kind of hypothetically to you, rhetorically. A price chart is a pictorial representation of all the participants' belief structures. If you were a brain surgeon and I put in front of you 3 different brain scans, you'd be able to look at those brain scans and go, that person has a normal brain, that person is suffering from Alzheimer's, that person is schizophrenic. Why is that? Because a brain surgeon has been trained and taught and understands that there are certain pictures of brain activity that reflect absolute known constants about human beings. Somebody suffering from Alzheimer's has a very particular kind of brain scan, and a brain surgeon or a brain specialist would be able to look at that and say, that is Alzheimer's, that's what you have, or it's getting worse, or we're making progress on the treatment, or whatever. They'll be able to do that because they know what that picture means. A price chart is a picture of everybody playing the game. Every time they decide to do something and they click the mouse, they put an order into the machine. When they put an order into the machine, it's offset with another order in the machine and a price prints. That means 2 people's belief structures are present, at least 2 people, at that price. So if you look at a price chart of a market, you'll be able to say over time, if you understand the thinking that goes into the market, you'll be able to say that market is confused, that market is confident, that market is angry, that market doesn't know what it's going to do next. You'll be able to look at the picture of the brain action of that market and be able to determine what is happening inside that market. If you can do that, or train yourself to do that, being able to pick what is most likely to happen next becomes significantly simpler and easier to do. That doesn't mean you're going to be 100% right. So the reason I'm saying that is this, Gary, is that if you're going to have no help at all on a price chart, other than what you would define as trend and support, trend line, support and resistance and trend lines, whatever that is, that still will not benefit you unless you can understand what the market structure is from underneath anyway. What I'm saying is that until you understand how a market tops, what the thinking is and the psychology that's in there, you won't necessarily have the ability to sell a rally and wait for the break of the trend line to add to the position, because you'll be looking at the trend line as an important issue when in fact something within the mind of the market has changed. Can you see that? See, this is what I teach in my Psychology of Trading course and what I teach in Theory of Markets to anyone that wants to learn, is that a market is a machine. It can only do one thing. It can process orders. So a secure uptrend, there are certain things about a secure uptrend that make it a secure uptrend. It's not following a line. It's certain kinds of price action followed by other kinds of price action. Say, the longs are in control of that market. The shorts have no chance. When that changes, there's a certain other kind of price action that is typical. Unless you know what those things are to look for, the probability of you being able to sell the high add to it as the trend ends, and then add to it again as the downtrend develops, is lower. So I don't really think that any particular technical analysis, whether it's algorithms like the Pro Trader's Toolbox, which is, of course, trying to be different, or anything else that you can think of, Elliott wave, Gann analysis, the atom theory of markets, Andrews pitchfork, Bollinger Bands, all, in my opinion, all that stuff is crap. And the reason it's crap is because all it does is focus on price and attempt to predict or project price. It doesn't understand what's going on behind the price that created that price. So if you don't know what's going on behind the market, who those people are that bought and sold and what they're thinking, then how can you anticipate what they're most likely to do next? If all you're doing is focusing on price, what if that price was created by a bunch of brain-dead idiots that are the last people in on the rally? Time to sell. See? So my point of view on no indicators, no anything of any kind, and just using a trend line or support and resistance numbers, I don't think it's of any benefit unless you can still figure out the underlying structure of the market. If you can do that, then most likely, then those things might help. It's the same as if you can understand the underlying structure of the market, using a tool like the Pro Trader's Toolbox is really going to help. You see what I'm saying? Joshua says, would like to schedule the one-on-one that we talked about. Sure, we can do that. Like I said, early next week is good, so just send me an email. Jerry says, thanks. I like and understand the answer. Good. Okay. Let's see. Kim said, a price chart is a psychological drawing of all participants. Okay, Kim, I didn't see when you wrote that. I'm wondering if you know, did you is that something that you came up with on your own? Because that's exactly, in my opinion, what it is. That shows a high degree of intellect on your part. Let's see. It says price only charts do not show magnitude, but only direction, and will lead to head fakes, probably. Let's see. Kim says, yes, I wrote the previous, I'm still learning. Good. All right. Guys, I got to tell you, that is all the questions and comments that we have. Kind of a light turnout today anyway. So I want to leave the door open here for a few minutes. Typically, I allow an hour. I know you guys have still got things you might want to do today. So if you want to split out of here, that's cool. I can stay for a little bit longer. If you would like to pose more questions, pick my brain for a little bit, or put something out there for discussion, maybe some more direct questions or comments about the toolbox, love to hear it. Gary says, give us a current view on Euro USD with PTT. Okay, I'll be happy to do that. I'm going to switch to Trade Navigator because I have notes and comments on here. As you can see, I've been trying to get long for the week. I bought it here. Ignoring my stop too close. Now we get to break it down. Point of view. Indication of the selling pressure seen from last week. Important. That indicates that the people who are playing the game right now are professional money. If we look at the one great cluster on the 180 frame that says here's the high for weeks on a Friday, a lot of this last week. On daily, it's basically saying it's all over. So what am I thinking? Well, what I'm thinking is I want to sell rallies in this market. I'm going to ignore the buy side because the higher time frames are congruent on the sell side. So when I'm looking at my 60-minute chart, you know, we have a buy signal here, buy signal here. These are rallies that should lead to some kind of selling signal or pressure, and that's exactly what happened. So right here, we're down under the lows, made a brand new low for the week, and the market died. And this is very important. I talk about this in, I was short on the way down. I got stopped out. That's what that out means. My short was covered right there. Where I'm drawing these two lines here, this is very important. I talk about this in time compression trading. One of the things that I talk about in there is the 5 types of market structure: topping, bottoming, secure trend, secure range, and a secure uptrend, secure downtrend, secure range, breakout or momentum, and topping, bottoming. One of the things I talk about in secure range is the relationship between the buyer and the seller and their interest in the market. At this point, when a market does this, right here, it stays in a very close-knit area for an extended period of time. Now remember, this is an hourly chart. So however you want to play it, it came down to this area here, and it's spending time right here, and this is a new low for the week. In order for it to stay within a very well-defined price area, that can only mean that the buyer on the buy order on the buy side and the sell order on the sell side, whether it's a liquidating order or an initiating order, doesn't matter. What matters is the order came into the machine. The buy orders and the sell orders are coming into the machine at a fairly consistent, constant rate. That means initiation. People are taking a stand. The people that went with the break to new low is it's all over, it's going to go south forever, get short now or I'm going to miss it, those people are selling. Who's taking the other side of that buy order? Maybe that's a short from above the market. The buyers, they still believe this. Here's the market coming down here like this. It's still holding the uptrend. It's time to buy. So they're getting long, right? They may be on a shorter time frame. If we look at a 5-minute chart, you know, the market is basically all over the place. Look at this. Here's a blue diamond reversal, an exhaustion reversal at the lows for the week on a 5-minute time frame, and the market's gone sideways. Lots of opportunity maybe for the upside here, right? So what I'm saying is that, in my view, because the market's died, it just broke down to a new low and quit. Somebody is stepping up on the buy side to absorb all those selling orders. Now that doesn't mean they're going to win. That means that's the structure of the market. So if the structure of the market is truly late seller, professional buyer, the buyer is going to sit on this trade for days. He's a professional. He's on a higher time frame. He knows it's going to take 2 or 3 or 4 days for this trade to hatch. So when he put his buy order in, his sell order to get out is in his back pocket, and he's even got the screen turned off. He's gone for the day. The seller, if it's a late seller, that would be a day trader. So that's a guy that's on a 5-minute, 10-minute chart, whatever, and he's selling the breakout or the breakdown. Well, if he's a day trader, what do we know about that guy? He's not going to be in overnight, which means sometime between now and the end of the day, he's got to enter a buy order into the machine to cover. So if the professional buyer is buying, absorbing the loser selling, and the loser has to buy to get out later, and there's nobody on the other side of that buy order, the market will rally at the end of the day because there's no sell orders to offset the loser liquidating order. So if this market rallies at the end of the day, that's a great clue that the loser is short and the market's got more upside. Now that's what you want if you're looking to sell a rally. You want to see that structure, sell into it. So what would I be looking for? I would be looking for some sort of rally that was hard and fast, and it stalls maybe somewhere up in here in the next 24 to 72 hours, and maybe a bunch of sell signals come on from the toolbox. And then I'd sell it. That's my take on it. I hope that helps. Kim's got a comment here. Let's see. You're a gem and a diamond. Okay, thanks. You said, like to learn more from guys like you. Please feel free to consider me your friend in the business. I'll help you any way I can. Gary says, lots of mic feedback. Anybody else having any problems with the mic or no? Joshua says, look through the Euro 4 hour And if you took every signal for the past 6 months, you would have been stopped out only 3 to 4 times if your stops were set at the red or green dots. Oh, I totally forgot to mention that. That's my fault. Since everybody's still here, basically, let me just do that real quick. You see these little green dots down here? See the signal come on here, and then there's a green dot? And the signal over here with a red dot? Those dots are the suggested stops. So if you sold right here and you wanted to let the toolbox help you pick your risk factor, this is where your stop would want to be, right? Depending on the platform, it'll list the stop here. Sell, stop, euro, buy signal, here's the number, right? So you got to be on like right here on the H. Up on the top it says sell, stop, euro, buy signal 132.23. So if you bought right here, here's 132.23. Now some people don't want to take a 120-point risk. Okay, trade a third your normal size for the entry. If the trade starts working, roll your stop up to here and add to it. I mean, you've got total freedom to do whatever you want. Let's see. He says, based on that, this allows you the trader to pyramid or compound their trades. Absolutely. Yeah, Joshua's got the right idea. Kim says we had a mic problem the last couple of minutes. Okay, well, hopefully that's not on the recording. So if you missed something, then we can get the recording for you, and or the recording when it's up on my website or whatnot, then it won't be there. So if something was missed, maybe at the end of the recording you can get it again. A couple other, yeah, we had mic issues coming in. Okay, that might be internet. Maybe it's on my end. Let's see. All right, not any more comments or questions coming in. If you guys want to take a minute on something, feel free. We had a couple of guys already drop out, so most guys I think are done. If you're considering getting a copy of the Toolbox, I don't expect you just to run out and, hats and horns over the table and buy a copy today. I'm not expecting that. But if you are interested, let's get together on it and discuss it. You can always get a hold of Progster, that's Steve, at codefortraders.com. He can give you technical details or walk you through a couple of questions that he knows he can answer. You can always get a hold of me. If you want to wait a little bit and see me use the Toolbox in real time, then come every Friday to my weekly wrap-up. I do a Friday weekly wrap-up of my trading using the Toolbox. And win, lose, or draw, I put it out there, exactly what I did. That's what I meant in the introduction when I said, look, I'm the real deal. I'm going to tell you exactly what I do and how I do it and show you how a professional trader thinks. If you find that valuable and the transparency that I bring to the table to show you, I'm not going to BS anybody. I'm going to give you the best help I can, and if it helps you, that's what you want. I do that every Friday. So if you want to come for a couple of weeks and just see how I use it, feel free. You can sign up on the website, and your link is good for the entire year. In other words, I have it set up so if you register once and come one time, just bookmark that link, and you can come every Friday afternoon all the way through the end of the year, and I'll be more than happy to help you anytime you want to discuss your questions. Kim says, enjoyed your last verbal walkthrough on chart. Good. Will says, despite minor mic issues, great listen. Good. I enjoyed the no BS information. You're welcome. John says, I think I'm going to do some mirror trading. Maybe go over the options regarding mirror trading. Oh, actually, the total complete details on mirror trading is on my website. Just go to theliononline.com. On the navigator bar at the top, there's a page called Mirror Trading. Take you 2 minutes to read the whole page and the FAQs. Feel free to get back in touch with me if you got questions, or email me. There's an email link there that says you're interested in mirror trading. It's specific for that. It goes right to my guy that's going to assist you with mirror trading questions and get you started. It's the easiest, simplest thing to do, and I think right now it is probably the best state-of-the-art way for any individual to get access to professional level participation. The problem that most traders have, when it comes to getting educated is, number one, is the education really going to help them? In a lot of cases it won't, but they don't know that. They have the same problem when trying to figure out what strategy or approach to use, and sometimes they'll make an investment, trust the judgment of another third party, and that guy doesn't really know what he's doing. In the mirror trading program, what you do, this is really interesting, what you do is you have a live MT4 account somewhere in the globe, and your account subscribes to the signals that I provide. So when the Toolbox has a signal, you get that signal after I take it. In other words, when I get signals on the Toolbox and I'm ready to do something, I do a trade in my live green train riding account. That's my money, and I'm not in this business to lose. So when I do a trade, I'm looking to make money today. There's a good probability that that trade has some potential in it. A mirror trading account sees that trade, and then you can structure your subscription any way you want. Some people, what they do is they just automate it so that they say, when Jason does a trade in his account, I want the same trade. And they set up their MT4 at their broker to accept that subscription trade, and they execute it. And you can control the size of the trade, so you can take more or less risk than I might or somebody else might. You can run your stops differently. You can set the limits so that, like, if I put a one lot on and then I add to it the next day and add to it the next day, you don't get the ads because you want to be, more controlling your risk. So you would decline those trades. Other people would want to take those trades. So you can structure your participation on the subscription any way you want. So if you want to get really aggressive, great. If you want to be really conservative, that's fine too. But basically what you're doing is you're allowing my performance to become your performance. And the best part of the whole thing is it doesn't cost you anything. So instead of you having to come up with 50 grand, find a trader and pay him, a percentage of the gain, all you got to do is open an account, connect it, and it's free to you. It doesn't cost you anything, So what better way to participate, save yourself some expense, and get the same basic quality too. And another thing, in the FAQs on the mirror trading, you'll see this. I show you exactly why trading a live real money account is so important to the quality of the mirror trading program. So if you're looking for a way to leverage somebody else's experience into your own and yet still control all the important things that you need for your personal financial situation, you have all those options available to you in a mirror trading program. Mine has actually some better features that other programs don't have. So you might want to look into it. It's up to you. I really like it. I'm enjoying building my track record, and I have good weeks and bad weeks. I had losses this week, sorry to say, but the week's not over. And, I put it right out there. I don't hide anything. I can show you exactly what's going on so you can feel confident and secure that you're not getting the runaround, So, John, I appreciate you putting that up there. Thank you. Love to have you as a customer on that, too. Gary says, I'm going to buy the PTT on the mirror trading profits, hopefully. Okay. I'll be more than happy to educate you. Let's see. Joshua says, what's my net pip gain for the week? I'm down. I'm down about 450 points so far in the week. It's not a big drawdown for me. That's a typical week. I'm either up or down 400 or 500 points every week. It's just how it works. Kim says, I bet most ignore the vast importance of psychology. That's correct. Makes me more curious of your class. If you want to take the class on the psychology of trading, Kim, all you got to do is go to my website. There's a page, Psychology of Trading. There's a very brief introduction to the Psychology of Trading course there, but there's also a video you can watch of the introduction to the course that I do every quarter. In other words, the next time I do the course, it's going to be Q2. That'll start in April. It'll run for 6 weeks. In order, you got to make a time and a financial commitment to attend, and I know that no one's going to do that unless they know exactly what they're, $1 is too much for something if you don't understand the value. So I do this free introduction to explain the content of the course, what's involved time-wise, what your commitment you have to make in terms of education, financial requirements, what we're going to cover in the course, the uniqueness of the content, and I think you'll be really impressed with that. I think you'll like it. So if you have the time, you might want to go watch the introduction video. It's a little more than an hour long, so you want to have some time available for that. And if you have any questions about the content or the cost or the time involved, you're welcome to pick up the phone and call me. If you want to reserve a spot for one of the quarters this year, You can do that. You don't have to pay me anything to do that. Just I'll put your name on the list, and if you change your mind, I'll let you know, or you'll let me know, I'm sure. So you're welcome to have a look at that if you're interested. Any other comments or questions, guys? I noticed Billy Ray Valentine's here again today. Billy's been coming occasionally to some of my broadcasts, so I'm glad you're here. I don't know if you're here for the whole presentation, so if you missed any of it, just remember it's recorded. It'll be up on my website, hopefully no later than tomorrow morning. Also, for everybody that attended today, I'll be sending out the link to get the recording. So if you want it, you can get it. Otherwise, you can just delete that email. That'll go out tomorrow. Billy Ray says hi. All right. I actually quoted Billy Ray Valentine this morning with one of my customers. We were talking about psychology of price movement, and he was saying that he was a little disappointed because he wasn't going to be able to get the G.I. Joe with the Kung Fu grip this year because he's on the wrong side of the market. And I said, well, I'd wait for 64 because I think that it cleared out all the suckers by then, and we had a good laugh. So one of my favorite movies. No more comments or questions. That's cool. Guys, if you want to go ahead and split out of here, we're good. Like I said, I'll have this recording up and running shortly on my website. Let's move that to here, move this to here. Okay. Well, guys, listen, it looks like we're done for today. Oh, we got one more. Hold on. Yeah, Kim's got a comment here about Billy Ray's deadpan stare. Bacon, such as you might find in a bacon, lettuce, and tomato sandwich. Joshua says, sometimes these signals come up until it's too late. Well, you got to understand there's no rush. The market's not going to run out of opportunity. That's why if you want to be more patient, learn the signals a little bit, and get real familiar with them, it's okay to consider waiting for a cluster. A lot of times the signal will come on and they'll cluster. Now, the higher the time frame, the less likely a cluster, only because the nature of the market is to move. So on a 4-hour chart, market can move a long way in 4 hours. So you may not get a cluster of signals on a large time frame chart, but on a small time frame chart, clusters are very common. So you could always wait to the second or the third signal before you finally decide you want to take it. So there's unlimited opportunity. There's no rush to do anything. You don't ever have to take the trade just because the signal comes on. You can wait a little bit. Gary said thanks for everything. He's out of here. Good. Let's see. Okay, good to go. All right, guys, I'm looking at the clock. We're out of here. Thanks for giving me a little extra of your time today. Hope everybody has a great day and a great weekend. If you're interested in coming Friday afternoon, the link's on the website to sign up. Otherwise, I'll see you at the next broadcast, whenever that is. And good luck, good trading. Don't forget to run your stops, guys. See you next time. Thanks.